Welcome to This Explainer. As your financial analyst, I'm super excited we're doing this today. We're going to dive straight past all those sensational headlines and really uncover the fundamentals of the hidden AI tech stack. Sure, we all know the big, obvious names dominating the news right now, but the real wealth in these massive technological shifts, that's usually built completely behind the scenes.
Just think about this for a second. If you had dropped, say, 11 grand into Nvidia just 5 years ago, you'd be sitting on roughly $30,000 right now. I mean, it's a historic run, no doubt about it. But here's the trap for us retail investors. Everyone is so totally fixated on Nvidia's past performance that we're dealing with some serious FOMO, fear of missing out. And if you're just staring in the rearview mirror at Nvidia, you're probably going to completely miss the next massive wave of wealth creation in the AI space.
So, how do we actually find that next big opportunity? Well, Ray Dalio, literally one of the most successful investors ever, has this brilliant principle: embrace reality, even when it's scary, then act on it. We really have to embrace the reality that AI isn't just some passing fad. It's never going to be less powerful or less widespread than it is right at this very moment. And that reality forces us, as smart investors, to look way past the hype cycle. We need to hunt down those fundamentally strong companies that have real, undeniable economic moats.
And wow, the reality of the numbers here is just staggering. The data center accelerator market is projected to actually triple over the next 5 years. That translates to a massive 27% compound annual growth rate. So to capture that kind of phenomenal growth, we're going to build the ultimate AI investment thesis today. We're starting from the absolute bottom up, looking for the companies providing the essential building blocks for this whole expansion. Okay, so here's our agenda for This Explainer. We're mapping out 4 companies to 4 critical layers. First up, the manufacturing monopoly, then physical infrastructure. Third, the platform layer, and wrapping up with distribution and security. All right, let's jump right into section 1, the manufacturing monopoly, ASML. To really get ASML, you've got to understand the almost impossible science behind modern AI chips. It's called extreme ultraviolet lithography, or EUV. Think of it kind of like trying to print a super complex, highly detailed image onto a single grain of sand. That's literally what creating a modern computer chip is like. ASML machines use ultraviolet light to print circuits that are actually smaller than the wavelength of visible light itself. Let that sink in for a second. And here's the crazy part. ASML is the only company in the entire world that can build these machines. This is basically the perfect real-world example of Warren Buffett's economic moat. You might be wondering, how on earth does one company hold a monopoly when thousands of suppliers make the parts? Well, think of ASML like a master chef. They source over 100,000 mind-boggling parts from all over the globe. Stuff like mirrors flatter than diamonds and microscopic metal explosions. They only actually make about 10% of those parts themselves, but they are the single company on Earth capable of assembling the final machine. It would take competitors years and tens of billions of dollars just to even get close to their assembly capabilities. These machines make the chips inside Nvidia GPUs. So if you're bullish on AI, ASML is an incredibly pure play. But here's the catch. Once you use ASML's tech to build these unbelievably fast, incredibly dense chips, you immediately run into a brand new problem, one dictated strictly by the laws of physics. Basically, what happens when these powerhouses get way too hot? Which brings us to section 2, the physical infrastructure, featuring Vertiv. Meet Vertiv Holdings. They're a $32 billion company whose single vital job is stopping data centers from literally melting down. Because here's the problem nobody is talking about loudly enough. Nvidia's new Blackwell GPU is 1,000 times faster than GPUs from just 8 years ago. And more processing power means exponential heat. Heat is actually the ultimate limiting factor on how fast a chip can run now. This is exactly why NVIDIA's CEO, Jensen Huang, publicly named Vertiv as their key partner for managing the immense power and cooling demands of their systems. When the top dog in AI calls you out by name, retail investors really need to pay attention to that. And wow, check out these killer financial metrics. Organic orders are up 57% year over year. They have a book-to-bill ratio of 1.4, which means for every dollar they bill, they're bringing in $1.40 in new orders. Plus, they are cash flow positive. Demand is just so through the roof that Vertiv's only real constraint on growth right now isn't finding customers. It's literally just hiring enough people to fulfill the work. It is a boring hardware product, sure, but the entire AI industry absolutely cannot function without it. So, with the hardware manufacturing and the physical cooling layers firmly established and humming along, We, as investors, have to ask ourselves a really critical question. Where does the long-term value creation shift to next?
That takes us to Section 3, the platform layer, with Meta.
This is the software foundation where Meta, the Facebook company, is quietly pulling off one of the most brilliant open source business strategies of the decade. To get why Meta is in such a great spot, we kind of need to look at history. Just like the mobile phone boom back in the early 2000s, AI is following this exact same three-step pattern of wealth creation. Step 1, hardware makers build the physical infrastructure. That's your Nvidia, your ASML, your Vertiv. Eventually, step 3 will be software companies building applications on top of all that. But right now, we are squarely entering step 2, platform makers building the software foundation. And historically, this is where the mega wealth gets secured.
Meta's big play here is Llama, their open source AI model. And get this, it has been downloaded an astonishing 350 million times. That makes it the most downloaded AI model in the world. Why is it so popular? Well, unlike ChatGPT or Google Gemini, developers can actually download Llama, run it locally on their own hardware, and keep all their proprietary data totally private. Plus, it performs incredibly fast. Actually, on some basic benchmark tests, it answers faster than ChatGPT while giving you the exact same results.
So how does this actually build their ultimate strategic moat? Well, Meta's moat isn't in selling the Llama model itself. They're just giving it away for free. They're basically running the exact same long game Google played with Android. Give away the underlying system so you become the default ecosystem that everyone else builds on, and then you just monetize that ecosystem later. For Meta, this massive ecosystem is already driving huge ad revenue through way better AI-powered recommendations on Facebook and Instagram. It's this idealistic approach that doubles as a completely ruthless, brilliant business strategy.
Okay, let's do a quick review of our stack. You've got the chips from ASML, the cooling from Vertiv, and the open source platform from Meta. But if you're a developer or a business, how do you actually distribute all this incredible AI power to the end user and do it securely on a global scale? And that brings us to Section 4, Distribution and Security, featuring Cloudflare. Cloudflare is stepping up as the global distribution and security infrastructure for the entire future of AI. You can think of Cloudflare's AI gateway almost like air traffic control, but for AI workloads. If you're a developer, it gives you the vital infrastructure you absolutely need to turn a simple, proof of concept chatbot into a massive global production app that can handle millions of users. It manages your workload routing, keeps comprehensive logs, handles traffic rate limiting so your app doesn't just crash under pressure, and it even manages fine-tuning pipelines. You can even swap seamlessly between AI models from Meta, Google, or Microsoft without having to rewrite your underlying application. It's a real game changer. But they aren't just stopping at routing. They're actually building native databases, like Vectorize, directly into their network. Just to give you some context on how huge that is, even tech giants like Microsoft Azure require you to go out and use third-party services for a native vector database. Cloudflare just has it built right in. On top of that, as AI gets embedded into really critical, sensitive industries like healthcare and finance, they've gone ahead and built the world's first AI firewall. Because let's face it, security is no longer just a nice to have, it's an absolute existential requirement, and Cloudflare is already building out that protection layer. And the scale we're talking about here is just breathtaking. Cloudflare's network reaches 95% of all internet users on Earth within 50 milliseconds. 50 milliseconds! By leveraging that kind of incredible reach and maintaining a whopping 46% compound growth rate since 2018, they've positioned themselves as the undeniable distribution king. Every major tech trend eventually needs a distribution and security layer. AI is really no different, and Cloudflare simply got there early. So, to wrap up this explainer, yes, Nvidia is a phenomenal company, and its historic run is totally well-deserved. But true, sustainable, long-term value for us as investors, that's found by understanding and investing across this entire interconnected tech stack. ASML owns the microscopic manufacturing. Vertiv protects the physical infrastructure. Meta is laying down the open-source platform foundation, and Cloudflare is securing it and distributing it to the globe. So I want to leave you with this final thought today. Take a real hard look at your investments. Is your portfolio actually exposed to the fundamental layers of the entire AI tech stack, or are you just sort of chasing the obvious headlines and risking some major FOMO? Do your own research, definitely speak to a qualified financial advisor, and really ask yourself if you're genuinely prepared for where the real future of AI is quietly being built. Thanks so much for joining me on this